Hello, this is Ian Gracious from The Trading Tigers. Today, 12th of February 2014, going to do an analysis on the S&P 500. So you've read the disclaimer, which I've just previously shown earlier. This is my chart. This is the daily chart of the S&P 500. Just to explain a little bit about what I put on my chart. This is the Donchian Channels, the yellow line, and it's got an upper and bottom channel using a 20 period. Together I have a 200 simple moving average along with weekly pivot points. Just helps me gauge how the market and price is with weekly support and resistance levels. And also I put in a slow stochastics with the settings of 15, 5 and 5. I find it kind of slows the outlook down, takes out all the noise, and makes it a little bit more easier for me to look at, and just give me a more depth in terms of overbought, oversold areas. So I know exactly where I am. So this trade I took on the 6th of February 2015. It had been a trade which we were looking at earlier, and in terms of the Donchian Channels rules, price was above the 200 SMA. As we can see, there was price there, and it had been for a significant amount of time. If we can scroll back and have a look, for significant amount of time, as you can see, it's just been a solid bull run all the way since around the 28th of the 12th. So for 2 years continuously, and previously back in June 2012, sometimes fell below the 200 and popped all the way back up. But as you can see, this indice has been solid all the way up. Really, we can look back in 2011, early 2012. It's just been non-stop all the way up. Yeah. So okay, the trade had activated a DNC when it hit the bottom channel, and price actually went further down as a correction. We had to then, although it had activated, we know on the smaller time frames things had kicked in, probably into triggering off a long trade. We know we're going to be in a long trade. Price is above the 200, right? So if we went to the 4 hour, we could see that's where we kicked in our trade. But at that particular point, the top DNC hadn't been hit. We look at the 1 hour chart. 1 hour chart, yeah, price had hit, bang. Price was below the 200 SMA, but with the strong fundamental outlook of the US, and if we had witnessed and remembered this solid bull run for several years, we know definitely price is going to kick up. Not only that, on the daily chart we can see prices in the oversold area kind of crossed and was going to move up. So we knew that, of course, this is going to be pushing not that easily. It didn't push that easily above the 200, but it did push up above the 200. We activated our trade on the daily, yeah, getting the confirmation of daily technical analysis as well as the 1 hour chart had activated the trade. We put our stop loss below the lower Donchian channel, which was at 1737. We activated our trade at 1766, 272 approximate kind of pips there for our stop loss. Price then shot through the S1 level, right? We can see there the S1 level, sorry. The P level had been taken out with this very solid bull candle and took right up to the R1 level. We look at the 4 hour chart, that took us to here. The 4 hour DNC Donchian channel had been activated, and the 4 hour and the 1 hour both were in open long positions possible. Price hit it above the 200 on the 4 hour, and you can see it's just been playing with that 200, the leading indicator that all financial institutions are looking at. And that's why we put it on our charts. The R1 seems to be holding right now in terms of a support. Today the trade had given about 610 points, taking it to this high at 1827. Since then, subsequently, price had come down. We had put a limit order at this blue line, which is 1829. Reason for this was our intention wasn't to take out the full direction for activation here, just peel off some profit. And this yellow line is 100% move using our Fibonacci expansion, so that would be 1, 2, 3, and that would be the 100%. So for the top, for the daily chart for the DNC Donchian channel trade to kick in would hit it here at 1850, right? So you can see the amount of pips that we kind of gained from here to about here, which is 847 points, sorry, that we did gain extra rather than waiting. This level 161.8 level would be a perfect location to end our trade or peel off some profits. Our key aim is just peeling off profits accordingly. Yeah, so moving forward, we have to wait for about 20 periods before our stop level will start moving up on the daily. If you can see the 1 hour chart, had we put our stop there, we would be in a free trade right now. You see, we would move our stop level all the way above up here as the channels moved, and we would be in a trade of 241 pips locked in. Currently we've locked in 520 pips for this trade, and we'll monitor to see what happens on the close of this candle. That's me, Ian Gracious from The Trading Tigers. We'll give you an update a little bit more about this trade in the coming days. Thank you. Bye bye.